And now it's time to jump into the options pit with the help of some smart charts. If you're thinking of playing the options market but are daunted by buys, calls, puts, and spreads, then it might be worth taking a look at what the technicals are telling you. The question for many investors, do you want to play the long game, or would you prefer the ability to use options to trade on one-day moves in the market? Joining us now to break it all down, McLaughlin, who is the All-Star Charts Chief Options Strategist. This segment is brought to you by Tasty Trade. Great to have you here with us today. First and foremost, I mean, just compare and contrast playing a long move versus a short-term move in the options market.
Well, thanks for having me on, by the way. But the nice thing about options, I find, and this is really resonating with retail traders in the last year or so, is that with options, you can define your risks better than any other instrument. If you're just simply buying calls when you're bullish or you're buying puts when you're bearish, worst case scenario is you know what your risk is. If the position goes way against you, you have a built-in stop loss. You don't need to do anything special. You don't have to worry about overnight risk of a stop loss order getting filled at a terrible price. You know going in what your risk is, and I think that is what brings a lot of people into the options market, especially retail traders over the last couple of years, as we've seen volumes explode.
Yeah, and volumes, hey Sean, it's Julie here. Volumes in particular have exploded in some of the newer products, and the new hotness, I guess, is what's called 0DTE, 0 days to expiration, which is sort of like the day of option trade. Can you explain to us a little bit about what exactly that is, how it's different, and why it has had such a big appeal as it's been introduced?
Sure. Well, there's a misnomer with 0 DTE options. I get a lot of questions from people saying, wait, they just listed these options today and they just started trading today. No, that's not necessarily the case. What we're seeing now is we have options expiring in the index option space. We have options expiring every single day. So if you look at the options chain in the S&P the S&P options, whether it's SPX, which is the big product, or SPY, which is the smaller product, you'll see an expiration happening every day over the next 14 calendar days, or next 2 trading weeks. So an option gets listed 2 weeks from today. So what's today? Today's Monday the 10th. So Monday the 24th just got listed today. And now that's going to trade every day from now until expiration. And so you have this rolling thing where every day you have options expiring. And this is great for people who maybe they just want to trade options that expire today. They're looking for a very inexpensive way to make a short-term bet. Or maybe they have a specific event coming up. Maybe there's a government report coming out on Thursday that somebody wants to hedge their portfolio against. They could very specifically target Thursday expiring options to do that. So the daily expiring options bring in a whole new realm of strategies and time frames, and it's really resonating.
Are there any downsides to the enthusiasm for that kind of product?
Certainly. One thing that traders with maybe a little less experience aren't familiar with is that when you're buying, let's say, an option that expires today, right? You're bullish and you want to take a short-term bet. If you get it right, it's great. The position goes your way quickly. You can make money quickly. But of course, when you can make money quickly, you could also lose money quickly. If you're on the wrong side of a trend, or if the market just goes sideways, those options are decaying in value faster than any other option on the board. So you really have to get not only the direction right on these trades, but you have to get the timing right. And that could be a whole new level of a game for people.
And that timing, as you were mentioning, largely event specific, perhaps, in some of the strategies out there. And so with that event specificity, we think about earnings season that's upcoming too. How much more volume do you see really initiate with this type of options trade as we get into earnings season?
Well, earnings season definitely drives volumes across the board, not just in options,
right,
but in stocks and in futures and currencies. I mean, it really affects everything. I expect that we will see options volume pick up dramatically, especially with banks kicking off earnings season very soon. We will see the options volumes kick off. And great news for people who trade, particularly the index options, where the volumes are high. The liquidity is very tight. One problem that people often have with options, especially if they want to trade them short term, is sometimes you're trading with bid-ask spreads that are pretty high. So for example, if you're looking at buying a call that costs $1 on the bid, it might be bid $1, offered $1.25. That's a 25% difference between the bid and ask on a typical call. When you're looking at, say, S&P options, those spreads are typically 1-2 cents wide. So in addition to lowering commission costs across the board over recent years, when you're trading with these options products that have tremendous volume, the bid-ask spreads are so narrow that also lowers the cost of participation, which is a boon for retail traders for sure.
Sean, going into this earnings season or going into this week's inflation data, what have you, given that we talked about you being a technician here, what are the charts telling you? What's particularly attractive to you right now this week going into some of these big events?
Sure, good question. One thing that we follow at All Star Charts is relative performance. How are certain sectors performing against other sectors? Relative strength is a big driver for us, is really what helps us sort through the noise and get into the strongest stocks. Right now, the healthcare sector is something we're paying a lot of attention to. Pfizer, Merck, names like that, names you know. There's been a lot of strength happening in that space relative to its peers. Also in the metals space, silver and gold, those are areas, and semiconductors also, by the way. Those three areas, healthcare, semiconductors, and metals, really have our attention. We've been putting on a lot of trades in that area because the charts are telling us so.
Got to listen to the charts. Sean, thank you so much. Interesting stuff. Sean McLaughlin, All-Star Charts Chief Options Strategist. Our Options Pit interview was sponsored by Tasty Trade. Thanks, Sean.
Thank you.
And we'll be right back.